RBS has cancelled a 5-year, $300 million contract, which was awarded to IBM as well as Infosys. We have Reema joining in to tell us more details about that, but it's fair to say that Infosys has also recovered quite significantly after that morning dip that we saw. Reema, over to you.
RBS has cancelled a 5-year, $300 million contract between Infosys and IBM. The actual revenue split is not known. The street is estimating $200 million of revenue attributable to Infosys spread over 5 years, which means about $40 to $50 million annually. That is about 0.5% of the company's revenues. What the street is worried is that this is going to put additional pressure on Infosys achieving its FY17 guidance, which was already scaled post Q1. Currently, it stands at 10.5 to 12%. Which anyway looked very aggressive, because now the asking rate to achieve the lowered guidance is about 3 to 4% between Q2 and Q4, and this is higher than the company's historical track record, especially in the seasonally weak Q3 and Q4. So anyway, the guidance was at risk. With the RBS deal getting cancelled, there is additional pressure on that. Secondly, and the bigger worry for the sector is that this perhaps is just the first casualty of a deal getting cancelled on account of Brexit. Will more follow? And this could just act as an overhang on the entire sector. So we've tried to speak to a lot of analysts and estimate what the current IT companies, IT vendors' exposure is to UK BFSI. And here goes the tally. TCS is the most at 8%. The rest, like Infy, Wipro, HCL Technology, is anywhere between 3 to 5%. But that is not necessarily the way stocks are trending. It's not that the companies with the highest exposure to the vulnerable sectors of UK BFSI are getting thrashed, because TCS has actually been the best performing stock this year. It's the only one in the large cap IT which has managed to outperform the market. YTD, the Nifty is up 9%, TCS is up 12%, while the others like Wipro, Infy, HCL are actually down anywhere between 4 to 5%. So the reason Infy could have recovered is because compared to TCS, which is its closest comparable, the stock has already seen a lot of underperformance. Back to you.